Okay, so welcome everybody to part two of this five-part series that we're really excited about. We're happy to have you here. So today's topic is business structuring and financial setup. I'd like to welcome back our guest speaker, Steph Desrosiers. She is a business counselor with PARO. I'm just going to give you a introduce her and then I will hand it over to her. She is a business counselor at PARO Centre for Women's Enterprise, where she supports women in building financially sustainable businesses through strategic planning, confidence building, and practical financial literacy. She brings a diverse background that spans corporate law, nonprofit finance, and entrepreneurship. She has worked as an assistant finance manager for a multi-million-dollar nonprofit, managed payroll and accounts payable and construction and service-based businesses, and built operational systems from the ground up. Her experience also includes corporate law administration, contract support, and business compliance, giving her a well-rounded understanding of how financial decisions impact both the numbers and the people behind them. Steph understands firsthand the challenges of cash flow, pricing, scaling, and financial confidence. Her approach is practical, empowering, and grounded in real-world experience, helping women move from overwhelm to clarity and control. So welcome, Steph.
Thank you. Nice to see everybody. I see there's a couple people here from series one, so welcome back. We're jumping into the second part of the series, which is focused on business structuring and financial setup. So we're going to dive into the foundation of how your business operates, pays taxes, protects you legally, and positions you for funding. This is one of the most important early decisions as an entrepreneur can make. So it's often misunderstood. So I'm happy to kind of throw out some information on that so that you have the most knowledge in terms of picking what the best structure is for your business. So just before we get started, I wondered, sorry, excuse me, what structure are you currently using or considering? Does anyone want to put it in the chat or unmute?
Yeah, oh,
Yeah, hi everyone. Are you talking about legal structure?
Yeah, we're going to dive into legal structuring. Yep.
Okay, so yeah, for me, I'm a sole proprietor and I'm considering incorporation for the next step.
Okay, awesome. And I see Barbara as well.
yeah, hi, Steph. Sorry, I guess I didn't understand the question. So now it's, are you incorporated or are you a sole proprietorship? Is that the what you're talking about?
Yeah, I just wondered, kind of where everybody was at in terms of what route they chose to go from the onset, or maybe if you are just starting your business, maybe you're looking at what way to go. So I just kind of was wondering where everybody was at with that in terms of how they started their business, what structure they chose. All right, we'll dive in. Okay, so this is what the agenda is looking like for today. So we're going to start with the three main business structures, how they impact taxes, liability, and funding. And then we'll move into practical setup pieces like registration, fiscal year, banking, HST, and bookkeeping. And then we'll finish with corporate layering and why legal support matters when incorporating. And then we'll of course leave some time for questions at the end as well. This one's going to be a little less interactive as the first series, but hopefully it's still just as valuable.
I'm sorry, Pam, Steph, I'm just going to interrupt you for a second. There in the chat, there were a couple of corporations and a couple of sole proprietorships.
Oh, okay, awesome. So kind of a little bit of familiarity with both. No partnerships, anyone on the Okay, that's okay. Well, we're going to talk about partnerships too a little bit. And then yeah, we'll get into the incorporation stuff. So I just want to start off with the next slide, which is me. So I'm Steph and I'm a business counselor with PARO. As Lori introduced me, I have a background in finance. I'm not an accountant, but I was the assistant finance manager for a multi-million dollar nonprofit. That gave me a solid foundation in managing budgets, systems, and financial operations. So I have a deep experience also in business startups. I've helped entrepreneurs like in the past from the very beginning, getting your business number, registering with the province as a sole proprietor. And then I've also done the flip side where I was a corporate law clerk for a few years. So I have the understanding of the business structure in that sense as well. Um, Outside of work, I'm a single mom of two boys, and I bring that lived experience into everything that I do. I understand the balancing act for women in business and the drive to build something meaningful while managing life's responsibilities. I also have a passion for interior design, and I find conversations around personal growth really energizing. That kind of spark, that kind that spark new ideas and help us grow as people and professionals. So when I talk about financial readiness and entrepreneurship and business structuring and setup, I'm bringing both professional expertise and real life perspective. My goal is to make these topics approachable, practical, and empowering for you. Okay, so why structure matters. Your business structure is more than a form you fill out. It's the foundation of how your business operates. It determines how you're taxed, what you're personally responsible for, and how funders and lenders view your business. It also affects your long-term growth. For example, a sole proprietorship is a simple and inexpensive way to get started, but it exposes you to personal liability, whereas incorporations offer protection and tax advantages, but it comes with more administration. There's no right structure. There's only the structure that aligns with your goals, your risk tolerance, and the stage your business is in. By the end of today, you'll have a clear understanding of what structure fits where you're at now and where you want to go. Okay, so sole proprietor. A sole proprietor is the easiest and the lowest cost way to start your business. All that's really required of you is to register with the province to get your business name, and we'll talk about HST after, but as a sole proprietor, you're not kind of paying yourself as an employee. You are the owner, you take owner draws. It's just a very different structure in terms of how it's set up, how you pay yourself, how you pay potential employees. You and the business are legally the same. So even if you decided to, I'm just going to use, I can't remember, I think she calls 123 Finance. Oh, there she is, 123 Finance. So let's just say 123 Finance is what she registers her business name as with the province of Ontario. She can use that business name, but legally the business would be Alexia and what her as an individual. So that's just something to be aware of, that, regardless of your operating name, your business as a sole proprietor is you as an individual. So your income is taxed as personal income, and your personal assets are exposed to business risk. So the important thing to understand is that legally there's no separation between you and the business. If the business takes on debt, gets sued, or runs into trouble, your personal assets can be at risk. Your home, that's like your home, your car, or your savings. So that's probably the biggest thing to take away as a sole proprietorship, is just the risk that's associated with it. And also, like, it depends on what your business is. If you're a photography business, you may not have a lot of risk in terms of being exposed and being sued. But if you, let's say, are doing permanent makeup, where you're kind of doing tattoos on people, there is that kind of risk exposure as a sole proprietorship. So another way to protect yourself as a sole proprietor, of course, is to have your liability insurance. I'm not really sure what's going on with my voice today, but yeah, so you want to make sure you have liability insurance to cover you, but still have the understanding that, you are the legal entity of a sole proprietorship. and the risk involved with that. So sole proprietorships are great for testing an idea, freelancing, like photography, let's say, or starting small, but they're not always the best long-term structure once you start taking on more risk or higher revenue. Any questions about sole proprietorships? Okay. Okay, so this is the one that nobody seems in the group, at least, to be in a partnership at the moment, but I still want to touch on it. Partnerships can be powerful when you have two or more people bringing different strengths, networks, and resources to the table. But with shared ownership comes shared liability. In a general partnership, you're not only responsible for your own actions, you can also be held responsible for your partner's decisions and debts as well. So one important thing that I would suggest if anybody is considering a partnership at any point in time is to have a legal drafted document, a partnership agreement. This protects you as an individual and in terms of, what you're entitled to in the business. Your owner draws can be all laid out so that one person isn't, just saying, I want $5,000 this time and $2,000 2 days later. You can kind of have it very structured in terms of fairness. And then if things go south, you're kind of protected that way as well. So very important to have that partnership agreement drafted by a lawyer if you are considering that. A partnership agreement is like non-negotiable. It should outline roles, responsibilities, decision-making, how profits are shared, what happens if someone wants to leave, and how disputes are handled. Without that clarity, you're relying on assumptions and goodwill. And I don't know if you've ever been in a situation where you kind of went in, in a verbal agreement with somebody and then it just didn't go the way that it was supposed to go, how you had verbally agreed upon it. You have nothing to protect you in that sense. So when you're getting into business with a partner and there's obviously money involved and assets, you definitely want to make sure that there's fairness. And the only way to do that really is with the partnership agreement. So if you're considering a partnership, think of the agreement as a way to protect both the relationship between the partners and the business. Any questions on partnerships? I'm trying not to just read from my notes because I am not the best speaker, but I think I'm doing a good job accessing the knowledge in my brain. Okay, so now we're going to move on to incorporations. Okay, so a corporation is a separate legal entity as the person. So whereas the sole proprietorship, you are the legal entity. When you incorporate, your business is completely separated from you. This actually it limits your personal liability, like we discussed in the sole proprietorship, where you could be responsible for getting sued. You could lose your house, your car, any assets, savings that you have. This would be one way to protect you and your personal assets. So the corporation can own assets on its own, separate from you. It can sign contracts, it can hire staff, and it can take on debt in its own name. Now, the important thing to note with incorporation is when you are looking at financing for a lot of traditional lenders, they're not going to offer you any financing until you've been in business for at least 2 years. They want to have those financial records. They want to see that the business is profitable and that obviously you'll be able to pay back that loan. So just one thing to note is, yeah, it's about a 2-year time period before you can actually apply for financing in any form. I believe that includes credit cards as well. So if you are starting out and you're looking at incorporating from the get-go, just be aware of that. You may need to do things like, figure out ways where you can access, maybe you have to look at non-traditional funding options. I think WEOC would be one that would look at you without those 2 years of financials. So that's just one kind of less traditional lender. When I say traditional, I mean like banks. So there's that. And then this separation is what gives you limited liability. So your personal assets are generally protected as long as you're operating properly and not personally guaranteeing everything. So if you, there may come a time where even if you do qualify for funding, and they may still want you to personally guarantee. That means that you as an individual would take on the responsibility of that debt if the corporation couldn't. So that's just one thing to be aware of, that, you know, you may have to give a personal guarantee. Depends on the lender, of course. You can also gain access to corporate tax rates, which can be significantly lower than personal tax rates once your business is generating consistent profit. That can open up opportunities for tax planning and reinvestment. And the trade-off is that incorporation comes with more responsibility, like corporate tax returns, a minute book, annual resolutions, and more formal record keeping. But those are all things that would be handled by your lawyer. So your lawyer would be responsible for keeping your minute book up to date, and doing those corporate tax returns. I believe your accountant can also do your corporate tax return for you. And then the annual resolutions would be handled by your lawyer. And all that record keeping goes and stays in your minute book, and your minute book can either be with you or it can stay at your lawyer's office. It's not something you just do because it sounds more official. It's a strategic move and should align with your revenue, risk level, and your long-term plans. Any questions about incorporations? So the registration and fiscal year. Once you've chosen a structure, the next step is formalizing it. So for a sole proprietorship, that usually means registering your business name if you're not operating under your personal name. For a corporation, it means filing articles of incorporation and setting up your corporate records. You'll also interact with the CRA. So you'll need to get a business number and potentially register for things like HST, payroll, or import-export account, depending on what you're doing with your business. So one thing to note, and I think I'm going to touch on it in another slide, is you do not have to get an HST number until you've reached 30,000 in gross revenues in the year. So you will need an HST number and a payroll number if you are planning to have employees. And you have to do things with an incorporation like file remittances to the government. So there's payroll remittances you have to file, and there is cost associated with that as well. So when you're filing your remittance, you also usually have to pay something to the government, and that amount can vary depending on how much revenue your business is making and how much you're paying to your employees. So that's something to be aware of with incorporations, is that there's kind of like those hidden costs as well that you don't probably think of when you're starting out. Your HST, when you do your income tax, like your annual income tax filings, like your accountant, and I would highly recommend that you have an accountant for an incorporation, just because usually when you're incorporated, there's a lot of transactions happening. There's a lot of invoices going out, money coming in, things being bought, things, assets being paid down. There's so much that goes into your incorporation and how you're moving in your business, the things you're doing in your business, that it gets a little bit messy if you're trying to do it on your own. So and if you're not really familiar also with how to do all the bookkeeping, you can also outsource your bookkeeper as well. So that's an option, but programs like QuickBooks are really helpful for keeping everything kind of in order. You can connect your QuickBooks to your bank account so that every transaction that you make with your debit card shows up in QuickBooks, and then you have to match it to the invoice of whatever you bought or whatever you sold. So there's just so much happening when you're incorporated that, yeah, it's very important to have that kind of support from the right professionals. Another key piece is your fiscal year. So sole proprietors must use the calendar year, but corporations can choose their fiscal year end. That flexibility can be strategic. You might choose a slower season, so you're not closing your books at your busiest time, or align your year end with your industry cycle. So that's just something to be aware of. These decisions affect your cash flow, your tax planning, and your administrative workload. So it's worth thinking them through rather than just defaulting. Any questions on registration and fiscal year or anything CRA? I might not have all the answers, but one thing that it's not super important to notice, but when you do register with the government and you get your business number, I think it's about an 8 or 9 numbers, and then you'll see there's like 2 letters, and one will be I think it's RP and RC, but they stand basically it's the first 9 digits are always the same. And then it just changes depending on whether you're filing for payroll or for HST. Those 2 digits are the only thing that kind of is different. So your business number is always the same at the front, and then you have your RT, or I think it's RC, for depending on what you're filing. Okay, so business banking and separating finances. One of the simplest but most powerful steps you can take is to separate your business and your personal finances. I would recommend this for whether you're a sole proprietor, a partnership, or incorporated. Of course, if you're incorporated, you're probably going to have a separate bank account, but very important for sole proprietors as well to separate those. So that you can really keep track of your business spending and separate it from your personal. That means opening a business bank account, using a separate card for business expenses, and avoiding mixing personal purchases into your business accounts. This gives you a clean audit trail. It makes bookkeeping and tax time so much easier, and it helps you really see how your business is performing. It also builds credibility when you're applying for funding or working with professionals. If you're incorporated, this separation is even more important. Mixing personal and business finances can weaken your liability protection and cause issues if you're ever audited or in a legal dispute. So if you're not fully separated yet, this would be something I highly, highly recommend you do right away. Any questions about that?
And you can also put your questions in the chat and we can do them at the end if anyone has any questions that come up.
Okay, so jumping into HST and bookkeeping now, we kind of did touch a little bit on this, but I mentioned that the HST threshold before you need to have your HST number is that 30,000 in taxable revenue. So that's your gross revenue that your business has made. So HST is one of those topics that can feel confusing, but the core rule is simple. Once you hit 30,000 in taxable revenue in a 12-month period, you must register and start charging HST. So yeah, before you hit that 30,000 threshold, you do not need to charge HST on your invoices because you're not paying any. You can also choose to register voluntarily before that, especially if you have significant expenses and want to claim input tax credits. But voluntary registration also means more admin and collecting, remitting HST. So it's a decision to weigh carefully because like I mentioned before, there is costs associated with that. There's HST remittances and then of course payroll and things like that. So on the bookkeeping side, you'll often hear about cash versus accrual methods. So cash basis means your record income when you receive it and expenses when you pay them. Accrual means you record income when it's earned and expenses when they're incurred, regardless of when the money moves. So cash basis is like actually having the money paid to you. And accrual is, the invoice is out there, but it's not paid yet. So you know that it's like money coming in, but it's not there yet. Whereas the cash basis is the invoice is paid and it's in your business bank account. So accrual gives a more accurate picture of your business, but cash can be simpler for very small operations. The key is to choose a method that supports your cash flow and gives you the clarity you need to make decisions. So you can do one or the other, but based on how you record things for your own bookkeeping. But yeah, accrual is probably the more accurate picture because it's all invoices sent out. It's what you expect to have coming in, whereas cash is just what you have at this point in time. Any questions on that? I feel like we're going to be done earlier than an hour. I'm sorry if this is very boring, but it's very valuable. Okay, so this is the one kind of strategic thing you can do once you are incorporated. Let's say you get to a place where you have one business and then you want to start a separate business, even if it has nothing to do with the first business, and you want to incorporate that one as well. One very smart move to make, and of course, like this would be something you would work with a lawyer on. And this is not legal advice, by the way. I'm just sharing this information for you to have because I don't think many people are overly aware of corporate structuring, corporate layering. But basically, so you have two businesses incorporated. They each have, like their own risk exposure. So let's say this one has higher risk exposure than business A is higher risk exposure than business B. You can essentially create a parent company that would be like a holding company. So all of your profits from each of these corporations can be moved to the parent company. And then if something happens where somebody tried to sue one business or the other, they can only go after what is in that corporation A or corporation B. So if all of the profits have been moved to your parent company, it kind of like, I guess assets as well would be moved to your parent company so that if somebody sued your business, they can't really go after too much because there's not a whole lot in that corporation. So corporate layering is more of an advanced strategy, but it's helpful to understand what it is and why businesses use it. Instead of having everything in one corporation, you might have a parent company that owns multiple subsidiaries. This might be a better example. So one company might hold your assets like property or equipment, while another company handles day-to-day operations. That's probably a much better, simpler way to explain it than what I did. The idea is to isolate the risk. So if something goes wrong in the operating company, your assets are better protected in a separate entity. This kind of structure is more common as businesses grow, take on more risk, or expand into multiple lines of business. You don't need to start here, but knowing it exists can help you plan for the future and have better conversations with your accountant and lawyer when the time comes. So the important takeaways is it just limits your risk exposure. If somebody sues the company, the operating company, there's not a whole lot to go after because all of the assets and the profits are in the parent company. Does that make sense? Yeah. Awesome. Okay. So why would you use a lawyer to incorporate? You can incorporate on your own, but I caution that because there's a lot that goes into your articles of incorporation. This is basically how your business is structured. It's all the very, very important fine details of your corporation. So online incorporation tools make it easy to file the paperwork, but they don't always help you think through the structure behind the structure. A lawyer can help you set up customized bylaws, shareholder agreements, and share structure that actually matches your goals, whether that's bringing in investors, protecting a spouse, or planning for future growth. They also make sure your minute book is set up properly and that you're compliant with corporate law requirements. These are the things lenders, investors, and sometimes even grantors will look at. It's absolutely possible to incorporate on your own, but mistakes made in this stage can be expensive and a messy fix later. Working with a lawyer is really about investing in doing it right the first time. So I don't know if anybody would be comfortable here, but I think there obviously from wherever you're located, there's probably variations in terms of what it costs to incorporate. The lawyer that I use and recommend, she's about $2,000 to incorporate. I'm not sure if anyone else feels comfortable sharing, you know, if they've incorporated, how much it costs them in your specific area, but I'm in the north, and that's what it costs to incorporate in the north. And then, of course, there's going to be annual fees. So beyond just your $2,000, the initial incorporation, you're also going to be looking at every time your lawyer updates your minute book. You know, that's about, and it ranges from $350 to $500 annually to have that done. And then filing your remittances. If you use an accountant to, let's say, file your HST remittances, it's important to know that there's costs associated with having all of these professionals working for you. So you just want to make sure that if incorporation is the way that you go, that there's enough profit, there's enough money coming in to be able to support paying these professionals to handle things properly for you. Okay, so we're just about done here. So pulling it all together, your business structure affects how you're taxed, how protected you are, and how funders and partners see you. But there isn't one correct structure that everyone should use. Some people say as a sole proprietor, some people stay as sole proprietors and that works for their goals. Others move to incorporation as soon as they start taking on contracts, hiring staff, or building assets. And some eventually move into layered structures as they grow. I kind of mentioned it earlier, as a sole proprietor, you're not paying yourself as an employee, you're paying yourself, you're taking owner draws. So you definitely want to maybe have a structure that can accommodate what you need to earn, what you need to be able to pay yourself in owner draws to support your personal, like pay all your bills and make sure that you can stay afloat personally. There is it's a 50-30-20 rule as sole proprietors, and it's very common to be used. You're the one that's paying your taxes on your own as a sole proprietor. So 50% of your profits, this would be your net profit, 50% is being paid to you as your owner draw. 30% should always stay for taxes. You're looking at 30% to pay for taxes. And you have to do that yourself. So you need to be making sure that you're putting that 30% aside every month, or it should be probably monthly, but it's also really important to just stay on top of keeping track of all of your expenses. So like inputting them in a spreadsheet if you're small enough to do that, or using programs like QuickBooks, so that you're kind of not forgetting to insert things, and then that kind of affects, what your owner draw is. So you just want to make sure that everything is inputted and accurate, so that you're making sure that you're getting paid enough, you're putting enough aside for taxes, and then the other 20% can be like reinvested into the business. So that could be if you need to buy computers, if you need to, just buy material or things like that. So, or if you want to grow in certain ways, it can be used for that as well. Maybe you want to put 20% aside because every month, because you are planning to incorporate in the future, and you want to make sure that that money is there to do that. So as your business grows, even as a sole proprietor, you can set yourself up with that 50-30-20 rule to kind of allocate funds how you see best fit for yourself and your situation. The important thing is that you understand the trade-offs and make intentional choices rather than just defaulting to whatever you started with. And remember, your structure can change as your business evolves. So it's not, if you start out as a sole proprietor or a partnership, you're not stuck there forever. You can incorporate and change the structure of your business when you need to. So when in doubt, it's worth having a conversation with an accountant or a lawyer to make sure that your structure is aligned with where you're headed, not just where you started. So if you're wondering whether you should incorporate, thinking about bringing on a partner, or feeling unsure about HST, this is the moment to ask. You don't need to have all the answers today. What matters is that you're starting to ask the right questions and think about structure as a strategic tool, not just paperwork. So is there anybody that has any questions or comments or things to add or things that I might have missed that you know about?
I have a question.
Yeah.
So we are in, like, I actually do have a partner. We're incorporated, and we've always we think of ourselves as a social enterprise. So we've always been sort of back and forth about should we actually be a not-for-profit as opposed, because we're concerned that it limits our ability to get grants. So I was interested when you're talking about the layering, is there a way to do like you have your parent company incorporated, but you could have like another part of your company that's a not-for-profit?
You definitely could. It just, in terms of the nonprofit and for-profit, is like the money that's coming in for the nonprofit cannot be moved to the parent company because it's a nonprofit. It's a social enterprise. It's intended to help people, right? It's not personal profits that you have earned. So yeah, there really wouldn't be much advantage to having the parent company if you have a nonprofit, because the money is intended to be used in that operating business, not to be transferred to a parent company kind of thing. Does that make sense?
Yeah, thank you.
Okay, perfect. Any other questions, comments, feedback?
Well, I just found this really helpful, and I'm new to PARO. So you said part 2 of a 4-part series?
5-part, yeah.
Oh, 5-part. And so next week will be
Yes, I can't recall off the top of my head what the next one is. But so the next one's going to be held, I believe, on March 18th. I think it's the third Wednesday of the month. And we're just going to keep following that sequence until the 5-part series is done. If you're looking for the first series, that was more on personal finances and like entrepreneurial readiness. I'm not sure if you feel like that would be beneficial for you, but we can have that sent to you if you'd like.
No, this is perfect to start. Thank you.
Perfect. Yeah, as we continue on with the series, we're kind of just going to keep diving in more and more to like the actual business type stuff, financials. So yeah, I think the first one was more, am I ready to be an entrepreneur? Now we're actually jumping into the meat and potatoes of it. Okay. I do have to go and grab, or Pam, do you have that survey link? If not, I can go and grab it.
I see the survey link in the chat.
Oh, it's in the chat. Okay, perfect. So the last slide is really, I just wanted to, there's some people that were on the first series, but we have our International Women's Day event coming up on March 5th at the Deerhurst Resort in Huntsville. So we really love if you could attend. It is a hybrid event, so if you can't attend in person, there is the option to attend virtually. And it's just, really about connecting, empowering women in business, and it's a really great opportunity for networking. So if you can attend, we'd love to see you and learn more about you and your business and really just connect. And Julie, if you're new to PARO and you're looking for a business counselor, we can definitely get you set up with somebody so that you can benefit from everything that PARO has to offer. This organization is really about empowering women, and I think you get that, Julie, because you have the social enterprise aspect. But yeah, we just really want to encourage women to get into business and take the risk and feel confident in taking risk and know that they have their built-in network within PARO so that they feel supported in doing that.
Stephanie, that's so great. I just wanted to add too, if you can't get to Deerhurst, definitely sign up for the virtual.
Yeah.
There's great speakers, and you will still be able to network and connect with people that are in the virtual room. So it's a lot of fun. So I hope all of you actually sign up and come.
Me too. I'd love to see some faces in person. Okay, well, so there is that survey link. I want to give everybody a little bit of time to go and do that survey. So if you could just grab it from the chat and complete the survey, and then that's going to be it for today. And then I'm going to actually, while you're doing the survey, I'm going to go back and see what series 3 is on so that I can kind of give you a brief little overview of what we're going to be talking about in series 3.
If anyone has any additional questions, put them in the chat or you can ask them now. And sorry, Steph, were you going to look and tell us what the next session is?
Yep, so I have it here. So series 3, we're going to dive into financial best practices and compliance. So I did talk a little bit about these things today. The goal is to build systems that support sustainable compliant growth. So we're going to talk about CRA compliances, HST, payroll, income tax, accounting software versus spreadsheets, chart of accounts and bookkeeping workflows, financial statements, your income statement, your balance sheet, your cash flow, budgeting for businesses, fixed versus variable costs, the 50-30-20 rule, and then record keeping and audit proofing. So that will be series 3 in March on the 3rd Wednesday.
Okay, great, thank you. Steph, if that's it, do we want to conclude?
Yeah. Thank you everybody for joining, and I hope this was valuable. I hope that, it kind of gave you some information to take away and consider what's most suitable for you and your goals.
Great, and thank you so much, Steph. And everyone else, if you have any questions, I put my email. I work at PARO. And you can always send me an email. And if you're looking for the previous webinar, let me know as well. We can get that to you. Okay. Well, have a great day, everyone. Bye.